The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 29th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is something each of us must master each and every day. So let's begin with some empowering beliefs. The first one by Ayn Rand. A creative man is motivated by the desire to achieve, not by the desire to beat others. Thomas Edison said our greatest weakness lies in giving up. Oh, how true that is. However, he also went on to say the most certain way to succeed is always to try just one more time. What a beautiful, and then I like Winston Churchill. I love this one because some of us, from time to time, the universe is just going to throw us some big tests in life. We might classify it as something else. And Winston Churchill went on to say, if you're going through hell, just keep going. I love that. And Ken Venturi, because it is Golf Thursday, he said, I don't believe you have to be better than everybody else. I believe you have to be better than you ever thought you could be. How true that is. Folks, the question for each of us, the question for each of us is not, what would we do if we had the means, the time, the influence, and the educational advantages? The question is, what will we do with the things we have? What is it that you will do right now? You know why, folks? Because you have an amazing power within yourself. Let's go check out the amazing power of these markets here. Right now, the Dow is up 20 points, trading out at 14,844. S&P up 3.5 at 1638. Composite up 21 points at 3613. Russell 2000 having a decent showing, a good strong showing today, up $4.80 at 1021. Apple up $4 and change. Microsoft up 23 cents. Google up about $8 out here. Google leading the charge, the upside. Methode Electronics, MEI, up a nice 33% this morning. That's up about $6. Apple up $4.50. K12 Inc., LRN is the ticker symbol. They're up 11%, up $3 and change. You've got Zillow, Z, the ticker symbol. They're up 4% this morning, up $3.77. Stem Line Therapeutics, STML, up 10%. Pharmacyclics up 3%. Guess Inc., up 10% here this morning. To the downside, we've got Genesco. That's off 10%, off $7 and change. The fresh market off $5. We'll take a look in on these charts, see if they're traveling down in any kind of support. You've got Signet Jewelers off 4%. Western Digital Corp, WDC, off 4% this morning. Workaday off $3, or Workday, I should say. Tesla just easing their foot off of the accelerator here, down $1.95, not a big deal. Campbell's Soup, looks like this morning they're serving up some tomato soup. It's a little red, down 3.5%. Our call number, 877-927-6648. Give us a call. We can most certainly take a look at your stock holding or something you're looking to get into. Let's start off by taking a look at the New York Stock Exchange. We want to do that because we want to understand the breadth of the market. What I'm going to do actually this morning, I'm going to do a couple different things. We're going to take a look at some different time frames because, in essence, we are going to be finishing the month tomorrow. So it's good to just see where we're at right now and what does the candle formation look like, because the candle formations really give us a ton of information out here. And I think what we're going to see when we take a look at these monthly charts, what we're going to see out here is probably a tale of two different stories, one bullish and one bearish out here. So we'll go take a look at those. Now, the New York Stock Exchange right now, we had that wide price spread, accelerated volume day a couple days ago, August 27th. And what price is doing is really just traveling with inside this bar here right now. So what we're seeing is a little bit of a bounce. Yesterday's move, that was normal. That was absolutely normal based on a couple of indicators that took place on that session here on August the 27th. So what are we going to see here? Perhaps for the next couple of days, maybe for the next week. is just simply, I would think, just nothing more than really a sideways move while the markets work off a little bit of that oversold condition out here. But nothing really bullish about the New York Stock Exchange on the daily basis. If we go take a look here, I want to go take a look at the VIX. You know, I sometimes I'll leave on the background the television or something like that. We'll listen to, some of the other news media sources out there. And I've heard people talking about the VIX. And as well they should. But I think the VIX, one of the most important meanings of the VIX is just simply, as I can find it out here, is just simply being able to apply that 50-day exponential moving average. Some of the complaints I hear is that the VIX is so low. Right now it's at 1617. Folks, when the VIX is above the 50-day exponential moving average period, that's when carnage can be done to the marketplace out there, and you've got to be careful when price is above that area. Just to give you an idea, so it's at $16 right now. There have been plenty of times when the VIX has been at $16. Just take a look at right back here on April 9th, 2012. The VIX got above the 50-period exponential moving average. Did that at the $17 level. So we're going to say 16, 17, come on, and take a look at the damage that was done all the way up into the lows of June 4th of 2012 out there. So there is probably, one of your more recent type examples of when the VIX is at a low stage, but yet traveling above the 50-day exponential moving average. We saw the same thing back here in October of 2012, October 19th to be specific, when it closed at 1706. The low there was 1490. There's where damage was done. That's what you want to be paying attention to. We can go back into 2007. If I pull this back even further here, when the VIX here, let's see, that's at the 20s. We want to pull it back even further just to get into the lower part of the ranges here. Let's see how far. Where can I pull this back to that makes sense out here? Let's just leave it. Let's just leave it there. What's the price? That's in the 30s. Anyways, we'll just leave it there. Let's go take a look at the other indexes. I could do that during a break or what have you. Come back to it. Let's take a look at the S&P 500. As we take a look at the S&P 500 right now, again, the importance here is paying attention to this downdraft candle from August 27th. You can see price here just traveling with inside that bar. Now, the S&P was not in an oversold condition, but it is the Dow that is. So it's really the markets that kind of need to drift higher, set up the next sell patterns that are out there inside the S&P 500 in order for it to suggest that there was a bottom that was put in here. It's going to need to get back inside the price channel. So the S&P could make a move up to the top of that price channel. That would take you, it's really the bottom of the rising price channel. That would take you into about the 1656 level. I do not expect that it will do that, but it could. It absolutely could do that. If we take a look at the, I know we'll go take a look at the ES Mini because the pattern out there is a little bit easier to detect. We take a look at the Dow. The Dow here, you can see this is the reason why the markets just need to move sideways here for a bit before they resume their move lower. The Dow also traveling with inside that down thrust from August the 27th, the top of which is 14,939 out there. That should find a pretty decent area of resistance. But what we can also see is the Dow has been traveling inside this descending price channel out here. So price could always try to get back and test the top of it. It has not done that since the time period of August the 14th out there. We take a look, at the Russell 2000. Russell 2000 here. Remember, that has been the real strength in the marketplace, but take a look at that wide-ranging bar from August the 27th out there. So until price breaks outside of that bar, again, all that's occurring out here is nothing more than a move sideways away to go ahead and work off some of the oversold condition out there, primarily inside the Dow. If we do take a look at the strength in the marketplace, that's going to come from the composite and the NDX 100. This in case here, now, and this is what we're going to really also be paying attention to, because inside the composite, it does have an island reversal pattern out here, right up at the highs. The highs here, most recent highs coming in at August the 5th, as price got up to 36.94, but just a few trading sessions ago on August 26th, they got up to 36.84. So this is up at the highs here. We saw a gap up from August 22nd to the 23rd. Then we saw a gap down from August 26th to the 27th. That is what set up the island out here, and so long as the ship does not get back there to rescue those passengers, this is the most bearish of all candlestick patterns that you can have in the marketplace, and that's the one that from the strength, because we have not seen a confirmed A to B equals CD down inside the NDX 100, inside the Qs. What we have seen is a consolidation pattern, but more so now what we have is we've got this island reversal. Same thing over here as we take a look at it inside the NDX 100. There's your island reversal. That too also coming up at these highs out here, so that's an important pattern for us to be paying attention to. Now, what I'm going to do is I'm going to switch over to another chart, another platform that I use out here. I'm going to go ahead and pull that up on the screen as soon as I can find it. This is my backup plan in case something goes wrong with one system. But in this case here, it more clearly spells out for you each of the candle patterns so we can take a look at this. I want to look at the monthly charts on each of these. And it's so helpful because, this is where you really want to understand what's going on. This is where candles, they absolutely provide you with so much information about support, resistance, what's going on, where reversals take place. Now, we're taking a look at the NASDAQ composite. And we're going to come over into the time frame of, let's see here. This is, what is this? This is, good Lord, come on out there. That should be in 2011. Give me a moment here to see if the date will pop up. There we go. So November. So there's the November. Thank you very much. November 2007. So as the highs were being made in October, the monthly chart here gave you that bear sash candle out there. So it gave you a bear sash candle, gave you the indication that the market was ready to pull back because, take a look at the market on its way up. As the market's on its way up, take a look at this candle right here. This takes us back to December of 2006. So in December of 2006, take a look at a nice bullish engulfing candle down at the bottom that formed back in August of 2006. Market moves higher. Take a look at this little red candle here. It's not bearish at all. And there's nothing more than a pause button. The market moved higher. You did have a bearish engulfing candle that took place out here. And again, we're looking at a monthly chart. This is back in February of 2007 out there. That proved to be a resistance level. As soon as price got above resistance, price was able to then go ahead and resume its move higher. That's a breakout above resistance. Old resistance becomes what? Becomes new support. Take a look at how that actually worked out here on this monthly chart. You can see that there was a push down into the looks like the August of 2007. But you can see that old area of resistance did become a new level of support, and that took place all the way up until we really saw this bear sash candle and things start to move down. Now I'm going to take you fast forward and take a look at where we're at today in the composite, in the monthly chart. So unless an all-out war really starts between now and the end of business tomorrow, the NASDAQ composite, all that we can say here, there is no bearish sign here inside the NASDAQ composite on the monthly chart. None whatsoever. In fact, there is really the only place for support now kind of takes us all the way back here to the bearish engulfing candle. Since it engulfed the prior body, it's going to be the high of the session here from September. Again, this is a monthly chart, September of 2012. And that high is 3196.93. That's the level at which you should see the composite act as support. If it gets back below that, that brings together a whole different thing out here. But, I don't suspect that we're going to see the composite fall apart tomorrow. And we don't see a bearish candle on the composite. The Dow alone will not move these markets lower out here. So that's the message on the monthly chart of the NASDAQ composite. We're going to go look at all of them during the next break here. 877-927-6648.
The Techno Term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 32. S&P is up 5. And what we're doing here at the moment is we're just reading the message of the markets utilizing Japanese candlestick patterns that are out here. And so this way, all I'm doing is giving you the interpretation of what things mean, taking a look at prior patterns. So as opposed to giving you my opinion, it's really just reading what the message of the markets is telling us. And I think that is the best way to approach taking a look at every stock chart, taking a look at what it is that you're trading. And what we always have to recognize is that as we take a look at the longer-term patterns out there, the longer-term charts, the monthly, it's always going to have more meaning to us than a weekly. Weekly is going to have more importance to us than a daily, at least in being able to understand what the market is doing. Now, obviously, on a shorter-term time frame, a market is going to turn faster than on the monthly. But we are approaching the end of the month. Tomorrow is the end of the month. In the case of the NDX 100, you'll see basically the same pattern or similar pattern to what we're looking at on the composite, in that as this month here closes out, you do not have a bearish reversal sign at all. Now, why is that important? Well, it's important for the following reasons. If you are watching us on Tiger TV, if you're listening on your radio or your mobile device at TFNN.mobi, thank you very much for doing that. You can catch the archive of this show on Channel 10. And what you will see is, there are no significant market declines. Yes, are there pullbacks? Are there, of course, there are retracements that go on inside the marketplace. But are there any significant pullbacks before a reversal signal is formed out here on a monthly chart? And the absolute answer is no, there's not. And that's where I said it's right now we're going to take a look at the tail of two different stories out here. Because we're going to take a look at the NDX 100. We're going to take a look at the NASDAQ composite. What's the NASDAQ composite made up of? About 4,500 stocks or so out there. So, pretty decent breadth of a market out there. And both in the composite and the NDX 100, we most certainly on the monthly charts are not seeing any kind of reversal signal whatsoever. Remember the daily? They turned earlier, so that's why we pay attention to the daily. That's why we pay attention to those A to B equals CD down patterns and island reversal patterns out there. But we also have to be cognizant of what it is that's up above us, that level above us. If we take a look at the level below us here in the NDX 100, let's go down to the weekly chart out here. The weekly chart is giving us signs of a market that is potentially, got some reversal signals, but really, take a look at what this really is showing us when we take a look at the weekly chart on the NDX 100. You know how important these candles are. At least they're important to me. And if you take a look at the candle for the week of August the 2nd, what we really see taking place within inside that candle is what? Nothing more than price trading within inside this pattern out here, inside this weekly session out here. So we haven't received a breakout or a breakout above or a breakdown below this area. If anything, at this stage here, you have to say on the weekly chart, yeah, you've got resistance up at the top, but that's all you've got is resistance. You don't have anything on the weekly chart inside the NDX. It's the daily chart where we've got it. The daily chart, most certainly, where we've got that island reversal that we want to be paying attention to. We know there's other resistance up here, but we really haven't seen the breakdown necessary inside this. Now, let's go take a look at the tale of different stories. Let's look at the S&P 5. Well, we can put up the Dow, but let's go take a look at the S&P 500 here. Let's go take a look at the monthly chart for the S&P 500. Now, inside the monthly chart, if we were to finish the session today or even just a bit higher, as long as it's halfway into the body of the candle here from July, then, you've got a dark cloud cover candle out here. Now, we had a dark cloud cover candle that appeared back here in June as well. A bearish engulfing, an evening star, a bear sash. Those candle patterns are going to be more meaningful than just a dark cloud. Dark cloud cover is like when you're going for a walk and you see storm clouds off in the distance. The storm clouds say you probably ought to take your umbrella, right? Or, if you're on a golf course and you see those storm clouds and you see, the first bolt of lightning, you might want to say, hey, you know what, maybe time to go in and grab a brewski or something like that. It's telling you of a potential storm. But oftentimes those storms, they'll just simply blow right by. So on the weekly chart here for the S&P 500, all that it's really forecasting at this stage is just some storm clouds off in the distance. If you take a look at the last time we were up at highs out here, this takes us back into the 2007. So here's the June 2007 time frame. Little dark cloud cover. The market just simply consolidated sideways until we saw that bear sash. So bear sash, much more meaningful than a dark cloud cover at this stage, and so not a complete reversal signal on the monthly chart for the S&P 500. Now let's go take a look at the Dow Jones Industrial Average. Let's go take a look at this on a monthly chart. And here we've got the bearish engulfing. So in essence, what we're saying is that if these markets are truly going to go lower, and I'm not saying that they're not, okay? I'm not saying that, but to suggest at this stage that we've seen all-time market highs and things of that sort, it doesn't show that in the composite. It doesn't show it in the NDX. It doesn't really show it inside the S&P 500. The Dow, totally different story. Right now, that is a bearish engulfing candle out there. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 42, S&P up 6. So earlier, the last segment, we were taking a look at the different indexes out there: the Nasdaq, the NDX 100, the S&P, the Dow. Now we're going to go back into the 30-minute chart. So how can you use that information with regard to the? Let's just say that you were in a mode to want to play counter trend rallies here. If you were playing counter trend rallies, would you want to go with the index that is the weakest or the index that has the most strength in it? Exactly. You would go with the index that's got the most strength. So you can see I don't even have on my chart here the Dow futures. You can certainly trade that out there. What I've got here is I've got the NASDAQ and I've got the S&P 500. Now, in the case of the NASDAQ, just to case in point, to just show how it is actually a bit stronger than the S&P 500, let's take and why we want to be paying attention to strength and weakness out here. I'm using the same swing point, by the way, to draw these patterns. That swing point is when John Kerry, in essence, shortly after the market digested John Kerry's comments about Syria out here. So I'm using 3:30 in the afternoon on August the 27th. So my beginning point to draw these patterns out here are that high from 3:30 in the afternoon. Now, what we can see here is in the NQ, the 30-minute NQ, it's already completed a 0.618 Gartley sell pattern. You can see it's got beautiful Fibonacci numbers. You got a 618 retracement off of that swing point. You had a 618 retracement off of the low. That came in here at 4:15 in the afternoon on the 27th. That was yesterday. Is that right? Yeah, today's the 2 days ago. To a retracement that was done here at about 8 o'clock last evening on the 28th. Yeah, that was last evening at 8 o'clock. Now what you can see here, and you got a 1.618 expansion of your B to C swing point. So ideal textbook Gartley sell pattern that is forming. You can see here on the RSI 14, you're up towards a level that is, overbought. So this is an area for, in fact, this to pause or actually reverse here. Now, you don't have a reversal candle, so just like we were looking at the monthly chart out there, no reason to take any action other than just simply tighten your stops up here and understand where price has traveled to. Now, if we go take a look at the S&P 500, you can see it's weaker than the NASDAQ. The same, actually, the 0.618 level, I don't have that drawn in here because I was trying to do the 1.618 expansion off of the same set of swing points out here. You can see that would be at 1645. We're at 1639. Right now, you've got the bulls trying to take on that bearish area, which is right at the 1639.25 level. If they can get above that, guess what? Inside the NQ, that'll take us to the 0.786 area, and inside the ES Mini, that'll go ahead and likely complete the move to 1645, about another 5 points higher out there. So that's how you want to be able to use these things in order to be able to trade these markets. Remember, old resistance becomes new support, or should become new support out here. So just as we're live taking a look at this, and you got to be careful, because what's going to happen is the NQ, as it makes its move to that 0.786, as it rises, as the S&P takes on, and should it get above this area here. Now, the reason I had these patterns in here were for what reasons? Ahead of time, as a leading indicator, I put these in here so that I would know what was going on with regard to any trades that I was in, or trades that I was looking to get into. You always want to do the homework ahead of time, and you want to understand these patterns. Then it's a matter of sitting back, letting things play out, and waiting for the triggers, or waiting for you to go ahead and be able to adjust stops and so forth. So in the case of the NQ, if we take a look at coming off of that same swing point down to the swing point low, the 0.786 area, because I know somebody was asking the question, is 3108. Well, look, folks, at 3108 to 3111, you're going to get a convergence of both a 0.786 retracement as well as the 0.618 off of the top that came in on August the 26th out there. And that's the area where I suspect we will see the bears try to step in and push the markets higher, because inside the NQ, guess what? It'll get into what's going to be that extreme overbought condition, and will not stay there for long. It'll move sideways, or we'll go ahead and pull back. But that's how you go ahead and take a look at a longer term, in my opinion. That's how you take a look at a longer term chart and get a feel for what you should be doing on a shorter term. So that brings us now to the metals. Let's go take a look at the metals complex out here. And we're going to start off with what used to be the weak link out here. And the weak link was silver. So now we're going to go to the monthly chart on silver. Now, let's take a look at what has actually transpired in silver this month. Folks, it has put in a significant bottom. If you take a look at this candlestick pattern, this 3-month, this is a monthly chart that we're looking at. This is called a three-river morning star pattern. It takes 3 months in order for this candle pattern to form. And I can tell you that this candle right here, for this month, very powerful as the Three River Morning Star patterns are confirmed. Very, very powerful. There is a significant bottom. Doesn't mean that it can't be that it can't be taken out. Anything can happen in life out here, but there's a very significant bottom in that 18-ish area out here. That's the low of this 3-candle session. But if anybody is wondering whether or not silver has put in a significant bottom, and you want to go ahead and take a look at the longer-term charts, such as the monthly chart, which is what I suggest that you do, silver has put in a substantial, significant bottom. Now, where's it going to find some real resistance on the monthly chart? All the way back up here at these bearish engulfings at the swing point highs in the $34 area. That's why you want to be sitting around waiting, not sitting around, but you want to be finding areas for you to be able to take positions. If we take a look at Goldilocks here, you'll actually see that silver has the stronger of the reversal patterns versus gold at this stage. So what does that say to you? What does that say to you on any pullbacks in the marketplace? Should you be looking at silver stocks? Something to think about. Now, let's take a look here at gold. Gold doesn't really have that same reversal. Here's our 3-month pattern on gold. In fact, all gold is doing right now, because you know I've helped to teach you to take a look at the power of the bar here, and that red down thrusting bar that we had here in June. We haven't really gotten to close above the high. The high of that, by the way, the month of June, that high is 1423.30. You're at 1405. Now, it is above the body of the candle, and really it's the body is the essence of price out here, so it's not a bad reversal pattern, but silver actually is the stronger out there, and we know that to be the case on the daily, but it's the monthly that really helps us to paint the picture. Let's go out to Alex in New York. Alex, thanks for calling. Thanks for holding. How are you?
I'm doing great.
Good.
Presumably next week, we're going to have volume increase after the holiday. What number?
We are?
What number on the S&P 500, short of 1709 in the cash, would you say the pullback is over if the S&P started to go up on higher volume next week?
Well, the what I would do here is I would take a look at I would first go back to the monthly chart and say, what's the monthly chart telling us? And the monthly chart. Okay, so how am I going to answer your question here? You see, here's the thing. On the monthly chart, Alex, and it's a great question that you ask, we don't have any real resistance at this stage on the monthly chart. So on the monthly chart, it doesn't really have to push up above anything in order to be able to answer your question, because we are not trading into any resistance area inside the S&P on the monthly chart. If anything, all that we would possibly have out here would be some, you could perhaps call it resistance, which would be the high of May. And that high in May was 1687.18 out there. And I use that because the June candle was what's referred to as a dark cloud cover. Just kind of tells us that there's some storms on the way. But the problem with that candle is it was taken out with conviction during the month of July. So the monthly, to answer your question, doesn't have to. It's still in bullish mode on the monthly chart when it comes to the S&P 500. If we take a look at the weekly chart out here to look for some resistance area, no real reversal candle signals, no one individual candle signal. If anything, what has been done here on the weekly chart is we had this little gap which is strong, the gap that took place the week of July 12th, 2013. So far, this week, that's acted as a support level, and that's what you really want to be able to see out there. So, you can take out the highs of the week from August the 2nd. That would be certainly nice and bullish. But when I take a look at candlestick charting out here, there's no real resistance out here. All we've seen is just really just kind of a normal retracement at this stage. If we take a look at the daily chart for the S&P 500, the daily chart, again, there's that little rising window on the daily chart that was really tested here. I don't know, is any of that helping you? Just because you're more of a longer term time frame trader. At least I kind of got that feel the way you were taking a look at the IBB and the tech stocks out there.
I sold the IBB on that, what I thought was going up way too high on the Amgen Onyx deal, and I didn't make it to 200. I got out at 198.
Oh, that's okay. That's a hey, you made money, so that's good. So, on the daily charts, yeah, there's areas of resistance for sure. And we've seen down volume. In the marketplace. Look, I'm not Mr. Bull here with my horns out there. What I'm trying to do for everybody that's listening in is it's very important to take a look at charts and anything that you trade on different time frames out here. And my whole point is, as we come into this month, is quite frankly, there's conflicting signals out here. Conflicting signals that allow us to go back, take a look at charts. And I'm telling you right now, specifically, I'm looking for a short position in the market, but I'm trading more on the daily at this stage than I am on the monthly. And there's something else that I'm trading that is contained in this morning's newsletter. Now, we're not short just yet here because we're waiting for the market to bounce into the area that first makes sense for us to take a look at it. So I do not want to be disingenuous, and I'm not going to be. And that way I'm just, completely being fair out here. So on the daily chart, I do see some moves that suggest that the market does want to go lower. But that has not played out here just yet. The daily shows, some resistance areas. You can find all different areas. You can find all these gaps down. Just like the gap up can be a support level, well, you've got this big gap down. So to answer your question on the daily chart, Alex, you're going to first need to see I'm going to switch over to another chart here. It's going to be just a little bit easier for me to take a look at as I come to the actual indexes here. And if we take a look at the S&P 500, because that's what you were actually asking about, on the S&P 500, on the daily chart, it first needs to clear this gap. So it's got to first get into the August 26th low, which is 1656 out there. Once it gets, if it gets above that, then it'll be back inside the rising price channel. I would say the other thing to be paying attention to is this little descending sub-correction channel it's been in, or maybe it's not, it's more than a sub-correction channel out here. If price can get above that, and what I would use is I would use my, this year I just set it up as really a trend line. You'd use the high of August the 5th out there, and you could use the high of August the 9th. That would be a good spot to use. And if price gets above that, and it can do that with some conviction, then on the daily chart, what it would actually be communicating to us that it's breaking a downtrend. And if it can break if it can break that downtrend at the same time that it's getting back into the original uptrend, that would be an indication to take a look at possible bullishness. I believe that next week begins the Jewish high holidays, and I believe there is a better than 70%. Larry's the king of the odds on this one. He's the one that really brought it to my attention years ago, and I believe that has a bullish outcome. And so I believe that actually begins towards the middle of next week, if I'm not mistaken. So you're also coming into a time period that also has a probability of being a time period where the markets move higher. But we're in interesting times. I don't think that we can take a look at what's going on over in the Middle East and just not ignore it. You know, now I don't trade the news or anything like that, but I do trade stock patterns. So I don't know. Does that help you?
Yeah. Well, I also do something else. I count the number of days that the pullback, trading days that the pullback has lasted, and that runs out. That runs out next week also, to meet up with all the pullbacks that we've had in this bull market since March of 2009.
Yeah, you know, there's no question. That's a great point, and thanks for bringing it up. You know, it's just a cycle management as well. So, you know, you've done one study, which is just take a look at the number of days with regard to a pullback. Now, what we'll find out here if we go measure it, and it works this way on nearly all stock charts, whether it's daily, weekly, or what have you. And the normal cycle between highs and lows are 18 days. If we take a look at 18 to 22 days out there. Now, if you go from the high here of May 22nd, I don't know if this is what you're also referring to, Alex, but a normal cycle is 22 days. And so I kind of use it, or 18.
You've got the number exactly that I'm looking at.
Okay,
22,
yeah.
22 to 23 days.
Yeah, that is normal cycle management that is out there. Now, you know, you need to be aware of it, and folks should be aware of it to be able to try to identify on the longer term. And you want to understand what the cycle is on the longer term to try to take a look at a shorter term change in trend in the marketplace. But you know, 18 to 23 days is what we see, and certainly if you go from May 22nd through the June 24th level, that was a 23-day cycle. If we do the same thing here and take a look at that cycle pattern, that would be from August the 2nd. Oops, I grabbed the wrong tool out here. Sorry about that. But if we go from August the 2nd, golly, you gotta hate when this does that. Okay, so if we go from August the 2nd, there we go, through the low that came in yesterday. Guess what? That was 18 days. So you might just use 22 days. I take a look at an 18 to 23 day window there. So I hope that helps you, Alex.
That's why I think the bottom might be in, and we might be going up next week.
Alrighty. Hey, thanks so much. Hey, have a great holiday, Alex.
Thank you.
Hey, you bet. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 79 right now. S&P up 10. Composite up 37 points out there. And let's go check back in on the 30-minute charts here. Let's go take a look at the patterns unfold here. So we've got 1645 is an area that should act as a resistance point inside the ES mini. That's as it completes that. Close to the point 786 Gartley sell pattern out here. We've got the NASDAQ futures headed right up into their resistance level right around 3111, 3108. So far, the intra-session high 3107 out there. Now, just nothing but you don't see any bearish bars or anything like that. But yeah, the market is starting to get a little bit overbought. And so on the intraday chart, you can expect the market, in order to work off that overbought condition, what's going to happen? You're either going to see a move sideways to a move lower. So what does that mean if you're trading this? It means to me what you should do is tighten your stops, or at least have the expectation that you should start to see the market pull back out there. Same thing inside the ES Mini as it gets up into that 1645-ish type level. The actual point 786 for it. If we go from the same session high at 3:30 in the afternoon a couple days ago down to the low, the 0.786 level, there is at 1648. So I would say the 1645 to 1648 should find some pretty significant resistance inside the ES Mini out there. If we take a look at what should you be looking for? Well, okay. Alex asked a good question. What would it also take for me to get bullish? What would the market? Alex, here's probably one of the best answers. the oscillator, the McClellan oscillator, needs to get above zero. The summation index needs to turn up, and that hasn't happened for a full solid month. Now, today, what it would need in order to transpire, you need 2,599 net advancing issues. So far today on the NYSE, you've got 1,000. So if the oscillator does turn up, if it turns positive, then what that says is the bulls then have control of the marketplace. And until that takes place, that is a reason to be bearish, and that's a reason to be looking for these patterns here to play to the short side. Now, remember, all of that is based on the activity and what it is that we see going on inside the daily charts. It does not have to do with anything inside at least the monthly charts from a candlestick formation. That's different than Basil's Chapman wave and the A, B, C, D, E's, F's, and that rogue wave G that's out there. But from a candlestick standpoint, the monthly charts, we went through that earlier, so I don't need to elaborate on that. So, Alex, it would also be the McClellan oscillator getting above zero, and that would have to make me say, well, what that would actually do, Alex, that would then all of a sudden bring the dailies, or everybody else out there, not really Alex, he's down the line, that would go ahead and bring the dailies in conjunction with what it is that we just looked at on the longer-term chart on the weekly patterns that are out there. So, that's what I would be looking for. If we take a look at, let's see what else is going on out here real quickly before we head off for the afternoon. Let me see what's going on with the euro-yen, see if there is a divergent pattern out here. So the euro-yen is just simply quiet. That's traveling sideways. It's really not confirming this move up, nor is it denying it at this stage, but it's just moving sideways while these markets are going up. That's not a good thing at all. In fact, let me put up the longer-term chart. It's a little bit easier for me to look at that, see if we can find any divergence. And it's very important, I use this chart here to identify divergence in the marketplace because it is the currency pair that will point the way to which way price will resolve itself inside the markets. And as we take a look at this here, you can see you're seeing a nice move up to the last couple-day bounce here inside the S&P 500, and we are not seeing that bounce at all. In fact, if the euro-yen starts to move lower, folks, and you're long, be very careful. It's actually giving you the signal to go ahead and go short. Folks, stay tuned. Basil Chapman will be up next. Have a great Thursday. Look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.